Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look at the euro currency again. So, if you remember in the weekly report, in the weekly analysis, we have prepared a bit sophisticated trading plan for the trading this week because we actually watching for good area, suitable moment for taking the long position. But market has formed three possible destination points where theoretically we could get this chance. Of course, our major area to watch for stands the same. On the daily chart, you could see this is the 111 approximately. It's conference support, weekly pivot support one, previous top. So that is our primary area to watch for. But at the same time, we have areas that potentially is also suitable for taking the long position as above this area, as below this area. And that's why our trading plan suggests splitting of the position, or for experienced traders, you could do the consequence of the steps that we have discussed in the weekly report on any of these levels, trying to gradually get the level where market finally will turn up. And currently, market stands at the first area that we have specified in our report, where the price action has happened particularly as we have expected. I just will remind you what we talked about, and you probably should recall this, and you understand what to do next time, on the next level, as soon as we will get there, if we will get there. So, when we started our analysis, we said that on the daily chart we have this level. That's probably, that's clear, that's very strong, and we will keep an eye on the next move down if it will be reached. But at the same time, when we talked about the fall time frame chart, we said take a look. We have two another levels. First is OP, it's 1159 right here. That's potentially where market could turn up, and that has happened. Also we have falling wedge, that's potentially a bullish pattern. Next area we have at 109.95, 110, that creates another agreement. It's XOP. This level currently is not very interesting because it stands below the daily conference that stands in the 111. It stands 110. But that level is the one that we should have to pay attention to. And take a look what really has happened. Market has completed OP, hits the level, and indeed has shown upward action. So that was the first point where we suggested taking the long position. Our strategy was just move stops here to the break even and see what will happen. So currently, if you have done this, you could manage your position as you would like to. You could grab your profit, you could take the half of your profit, keep the stop at the break even and see what will happen next, or you could even tight stop higher in anticipation what will happen if market suddenly will continue upward action. So we did that because we do not know definitely from which level market could turn up and reestablish upward continuation on the longer time frame. That's why we have to pay attention to all three levels. And first level already is worked out. Now we need to keep an eye on what will happen next. Either market will continue move down. In this case, we could consider this ABCD pattern that creates actually agreement with the daily conference support. That's really could happen. Well, alternatively, if that will be a real upward continuation immediately, right now, we could consider this pattern on the hourly chart. Take a look. On the way up, market has completed this clear pips to pips OP, very accurate action. So for scalp traders, that's perfect objective point. And if you keep longs, you trade on the hourly chart and lower time frame charts, you could maybe think about the profit booking or something. Well, currently market stands in the pullback and reaction on the OP. First target that's more probably will be hit is the confidence support, 1277, 1279. But potentially, take a look here, we could get large head and shoulders pattern. In this case, retracement should be somewhere at the 1237, where theoretically upward reversal could happen. This is really big object for trading, for intraday traders. First of all, intraday traders could consider taking the long position in the first touch of the confluence because there's strong support and agreement. And there definitely will be some pullback here up from there. Move up to the break even, see what will happen, or even grab the profit or something of that sort. Trade the first bounce up from here. If no upward continuation will happen, the market starts standing lower, keep watch for this level. Here's theoretically it is possible to consider taking the long position with the stops slightly below this level. For us, if you intend to keep a long position right from here and keep the stops at the break-even and do nothing with this action, pointing on, targeting on the high time frames in anticipation of the higher upward action in the EUR, you just keep watching what will happen at this point. If market start dropping below it, it means that we're going lower on the daily, on the follow time frame chart, and we probably will get this ABC pattern. Because market on the way down will break all support levels that it has, and that will be clear sign that we're getting lower. If not, if upper reversal still will happen either from here or from here, this could be reverse head and shoulders, and that could be the real point, and that will be the point market really could start upward continuation on the euro currency. My guys suggestion that based on the technical situation, I'm not talking on some fundamental background, but based on the technical situation, well, theoretically on the daily chart, retracement still should be lower. It's just by technical picture, because we're bouncing out from the confidence resistance on the weekly chart, and we are bouncing out from the weekly overbought. This combination of the weekly chart in general suggests deeper retracement. And here market hasn't reached even 30% support. That's why, despite that really cool upward bounce according with our trading plan, here indeed we could get some trading stops, maybe even hand and shoulders pattern here. But I would suggest that, well, chances are really significant that we will get dropped to the 111 at least, or even lower. That's just my view. But it doesn't mean that you can't trade on the intraday charts if you're trading on the lower time frames. So, that being said, speaking on our daily trading plan that we are following right now, here, if you have taken the long position and market stands at this level, you could either move stops to the break-even and see what will happen. Alternatively, you could book the half of your result and keep the rest one and see what will happen, or you just could close the position and see where the market will show retracement, and then consider additional entry with the same stop. It's so a lot of options that you could apply here with the managing your position that you have. But our major focus currently is of course, in this area, because it will tell us what to expect next, whether we will get the downward action to 111 or not.